The checklist, well, not much change really. GDP, I'm leaving in neutral because as we just discussed, economic growth is slowing, not in an easing state yet, but it's weakening. The inflation rate is also coming off the boil. It's still in marginal tightening because the actual rate is above the target from the Reserve Bank, but it is starting to come down. So they're the two dominant things. And the labour market. Look, the unemployment rate, which we didn't discuss earlier, it's just starting to creep up a little bit. The job ads are turning down. So I'm going to move labour market to neutral because I want low unemployment. And the fact that wages are topping out, so it appears, is a sign that we don't have that wage price spiral, which is why wages, I'll leave them in the neutral category too. If we get to 4.5% annual wages growth, I'll move that back to the tightening side. But at the moment, it's like the Goldilocks, not too hot, not too cold, just right in terms of wages growth. International economy, that's weak. I'm going to put that on the cusp of easing. As we discussed, rate cuts are being priced into money markets in the US, Europe, UK, Canada, New Zealand, everywhere because the international economy is slowing down. House prices are coming off the boil in Sydney and Melbourne. I think in Melbourne, according to CoreLogic, they've actually started ticking down.
And also auction clearance rates are down. Correct.
So the housing side, and all we did with this rebound in house prices in 2023 was virtually completely offset the losses in 2022. So house prices today are about the same as they were 2 years ago. They went down, they've gone up, and they're about the same. So they're fine. Retail sales, as we discussed, shocking. We consumers are hunkering down. That's in the easing cycle. So if the only thing you were looking at the RBA were retail sales, you'd have it very weak. Same with consumer sentiment. We are miserable. The consumer sentiment numbers just do not want to bounce.
Before I move you off that, retail sales, can I ask you a quick question?
Yes.
On retail, in the inflation basket of goods and services.
Yes.
If I go to services, because obviously as retail sales, let's talk about goods, but if we look at services, is there any data around to say which part of the economy, which part of the consumer economy is buying services? For example, is it the people who ordinarily would have money on deposit? I mean, are we talking about...
Some parts of the services side are very much those older folks. Holiday travel, that's a service.
Accommodation with holiday.
Accommodation and an air
Then restaurants.
It's a service. That's the services and healthcare. And we know that old people spend a lot more on healthcare than young people by the nature of getting old. Things like insurance, everyone pays a bit. So, but there is a propensity or a bias for the older cohorts, holiday travel, which is somewhat of a luxury, I think it's fair to say. Like if you didn't have to do it, you'd still be okay, but it's nice to do, of course. So that services consumption is where the side of the economy is a little bit more resilient, but it's goods. Going to department stores, we're buying less TVs. We're holding on to the existing one for a while because we can't afford another $1,000 to buy a new one. The thing that the RBA governor mentioned, which I thought was quite funny, funny in a warped way, was that it's just something like, one of the services where the prices are going up, a lot of haircuts and dentists. Well, haircuts, I suppose we could all grow our hair really long if we wanted to, but haircuts are pretty much an essential, I'd have thought. And dentistry, well, yes, we hear of people not going to the dentist because it is expensive, but, do you hike interest rates to stop people having a haircut?
Or going to the dentist?
Going to the dentist, like they're really fundamental things.
They're living standards.
And they're services too, but, anyway, there's some services inflation in those parts of the economy. Building approvals, another shocker. They're as weak as water. We're not building enough houses, which we've spoken about in the past. Business investment, I'm putting that in neutral. Business investment doing well. The NAB survey of business conditions, business confidence, nice and resilient, which is a good thing. So I'll put the business confidence with the business investment. So it's this sort of, what do we call it? The patchwork economy, I think it's been called in the past. Different parts of the patchwork are doing different things. Business doing okay, consumers doing badly. I think this is sort of where this chart's going up. Commodity prices, neutral. As I said, they're more resilient. There's something brewing in China. I think that there's still high prices for our iron ore. Some of the other commodities like oils come back down to $75 a barrel. It was 90 a few months ago. Good for inflation, but it's a sign perhaps that the world economy is weakening. We're not burning up as much oil as we used to. Stock market, neutral. Never really use that. And current interest rates, I'm going to put towards easing because even as the RBA says, Philip Lowe said it when he was governor, Michelle Bullock's saying it's now, monetary policy is restrictive. It's not like we're starting from 0.1% where we were 18 months ago. Then you'd say, well, they've got to keep hiking. Fair enough. So you'd have that in the hiking column. The fact that there's been 425 points of hikes, that's a lot of lot of gunpowder in the economy. I'm putting it towards easing. So overall, the things that are most important are neutral to slightly tightening. The leading indicators are neutral towards easing. So in the next 2 months before we meet in February next year, we'll have a lot more information on inflation, GDP, and the unemployment rate. So they're the three things that I'm going to be looking at as we go for
a lot
our
of
summer
ABN
holiday.
data. A lot of ABN data comes out at the end of January. So
Correct,
and that's
yes.
important. So what do you reckon, mate? Up or down? Nothing. Zero. What's going to happen?
December, I think they're on hold. Look, while they're sort of talking the talk, with the November rate hike, that took a lot of people by shock,
Especially
by
you and I.
surprise. Yeah, particularly you and me. But it also, I think, impacted when we look at the consumer sentiment numbers. They took a hit, and the anecdotes from real estate businesses, that's the spring/summer selling period, the hotspot. And as you mentioned, auction clearance rates down, funnily enough, as that rate hike was being delivered.